Welcome back. You're watching Market Fatafat right here on ET Now, and let's take a look at Bajaj Electrical's numbers. They actually hit the Borosil a short while ago. If you look at the profits, definitely is lower on a year-on-year basis. If you look at the margins, also have seen some sort of a contraction on a year-on-year basis. The stock is trading lower by about 2.3%. But let's actually bring on board the management to understand what exactly impacted their earnings in the quarter gone by. We have Mr. Anuj Podar, who's the MD and CEO at Bajaj Electricals, joining us this afternoon. A very good afternoon to you, Mr. Podar. Thank you so much for joining us on ET Now. And your numbers hit the bourse just a short while ago. And in that, definitely the commentary, what's mentioned is the fact that there was a weak consumer demand sentiment that sort of may have impacted your consumer products and lighting solutions revenues in the quarter gone by. Has the demand recovered from those low levels, or are you still seeing it impact in this quarter as well?
So firstly, thank you for having me, and I'll answer that straight up. Yes, Q3 is definitely looking better. It has started on a stronger note, and I think the two factors that have impacted Q2, one is just a general weak environment for consumer demand that we saw, particularly in September. But also there was a little slippage or delay of the festive season this year from Q2 into Q3, which is why the base effect kicked in. I do see a better start to Q3 and hopefully a better end to Q3 as well.
Okay, better start to Q3 and better end to Q3 as well. So approximately then, obviously, will it be the consumer sector or even lighting is seeing as much as a growth over there? And could we expect then, single digit, mid-single digit growth or a high single digit growth for quarter 3, quarter 4 then?
So firstly, consumer products segment has started off better in Q3. You are seeing a demand uptake on the tertiary demand, which always follows or leads to primary demand for us. You're seeing that across categories. I'll just also call out, even in Q2, it's a little lost in the numbers, but we've done fairly well in fans. In fact, I think we've gained market share in fans, coolers, mixers, which are core category for us in Q2 as well. I think that trend continues into Q3. I do hope, provided winter sets in on time, you should see a good Q3 also in the back of water heaters, which is another strong category for us. In terms of lighting segment, I think consumer lighting may be some way off from recovery, but we have a good order book in the professional lighting segment. Some of that revenue got deferred into Q3, which is why I'm also bullish on lighting overall in Q3, led by the professional lighting segment. Yeah.
Okay. Also, Mr. Podar, what I want to understand is in terms of the margins also, because they have also seen a contraction this time around. One, in terms of the factors that are impacting the margins and the sustainability of the margins going forward. Could we expect that 8-9% that we saw previously coming back in terms of margins for the second half of the year then?
If I look at margins, and I've been tracking that over a longer arc of the last 2 years, there has been a contraction of margins for the sector as a whole. In that, if you actually plot our margins versus competition over the last 2 years, we've done a much better job than our peers, I would say, in terms of balancing top line and margins. The impact on us has been the least amongst all the players in the sector, which I take as a positive sign. As the market bounces back, as demand picks in, as sales comes in, I think a lot of these margin pressures, some of this is tactical because of price discounting, etc. So I think that part will correct very rapidly as the market comes back, because the irrational pricing will go out and people will start picking up prices and margins. I can leave it for us on margin expansion, really our own operational improvements that we're working on. We have a clear roadmap on that. That is, very much playing out, and we expect that to continue. The third factor that will bring in here is our product portfolio strategy and premiumization. That is continuing to gain and do better, across our product categories. We are having been seeing improvement in that strategically on the right roadmap on that, focus on brand spends and product innovation. I think all of that is going to lead to better margin expansion for us. I think we're very much on that strategic journey, etc. is very much on track here.
I also want to talk about a trend that has been picking up is in terms of premium product side is doing much better than the mass products overall across industries. Is that something you have witnessed as well? In terms of maybe more premium products or more high ticket size products are doing much better than something that a mass product would do?
Yes, I think that trend is pretty secular and across the board, across product categories and beyond our sector also. That's a given. I think that bodes well for us because the reality is today, Bajaj Electricals has traditionally been more weighted towards non-premium products, which is why in the short term, our performance may be looking weaker. But as we're upping to my previous point on improving our product mix, we are premiumizing more. Every category, whether you look at mixers, coolers, fans, kettles, water heaters, our mix is changing for the better. And as that happens, that's why I'm confident about the medium to longer term. revenue should continue to pick up and the margins will expand at the top line, leading to bottom line expansion.
Mix you would be targeting, Mr. Poddar, then, for premier products, where do you see it headed in the next couple of years?
I'm sorry, I didn't fully hear your question, but if you're looking at a number,
Yeah.
I don't have a number for you, but clearly our mix is getting better. Internally also, if I were to look at our own gross margins at a category level, they've expanded by about 4 to 5 percentage points. Some of that is lost in the deleverage and our incremental R&D spends. But when I strip that down for ourselves, we're seeing those visible expansions in our own book in MIS. One other point I'd try to bring to you is if I look at this current quarter, we've had a contraction in general trade. I think a lot of that is led by weakness in the rural markets. But if we look at all our alternate channels, whether it's e-commerce, modern trade, institutional sales, they've all seen extremely healthy double-digit growth for us. So which is why, again, I'm confident.
A bit of a subduedness in terms of rural market, that is also something that has impacted the company. Lastly, I just want to know, obviously, in terms of the EPC business that has been demerged with the company now since the 1st of September, how is that looking like separately now? Your order book, last time I checked in July, was around 144 crores for professional lighting projects as well. So both these things, if you could give us an indication on that.
Yeah, so professional lighting, I'll answer first. The order book is actually pretty good. We have a very good billing visibility for Q3, Q4, and that is continuing to grow. On the EPC business, as you said, it demerged effective 1st September. What we reported in this quarter is Bajaj Electrical is 2 months of results, that's July and August. Mind you, that shows a slight loss, but that's transitionary because this quarter, as part of the transition, innovation of contracts, build in, continue some of the invoicing for that. I think that will bounce back from October itself. The order book for the EPC business is extremely healthy. In fact, it will probably grow 4 to 5x over the next 1.5 years in terms of just the billing and run rate over there. So I think Q3, Q4 for the EPC business should be extremely strong. Just a clarification that will going forward be a separate listed company, hopefully by end of this month. So that will be a separate listed company with separate results, but extremely promising and strong.
Surely watching out for that, Mr. Poddar. But thank you so much for joining in with us this afternoon on ET Now and talking to us about the company and what should we be expecting from the company going forward. That was the management of Bajaj Electricals, Anuj Poddar, for you all. But let's keep it going with all the other stocks that are buzzing in trade and all the technicals. Now we're joined by Kunal Rambhia as well. Kunal, a very good afternoon to you. And the first stock on the technicals you've picked out is Reliance. Take us through the charts for this.
Very good afternoon to everyone. So if you look at the Reliance chart, obviously we discussed about this counter, I think last week itself near to 2260s when it was giving the first kind of sign of the support, which was 228. Now it's giving the breakout of the entire down channel, which we witnessed from July till now. The breakout is at around 2320. The counter is already trading at 2337. One can definitely initiate a buy at the present level. I think the ideal stop loss here would be 2320. And the first target on this can be 2500. It's a damn positional target. So buy on dip and keep trailing the stop loss till the time the target is achieved.
Let's move on and talk about Zomato. This stock is in focus. They reported their numbers on Friday, a good set of numbers that came in from the company. Now, overall, we have a couple of brokerages that will come out with a note as well. HSBC has maintained a buy but hiked the target price to 140 rupees per share from previous target price of 120 rupees per share. They believe the company's reported gross order value growth in both food delivery and quick commerce business and is in line with what they were expecting. Margin expansion was also in line. The guidance for Q3 is quite strong as well, with high single-digit growth expected in food delivery and continued traction for quick commerce. So that is why they remain positive on Zomato and with a long-term perspective as well. Jefferies too has maintained a buy on this one, hiked the target price to 165 rupees per share from previous 130 rupees per share, and they too are positive on this one, and that is why you're seeing that Zomato is buzzing in trade. We had positive commentary that came in from the management as well in the con call as well, and that's the reason that we're seeing an uptick of around 3.7% for the stock.
All right, moving on then. A lot of earnings coming in. You had KPR Mill short while ago that came out with its numbers. You have Bata India is not announcing numbers but a tie-up for Nine West Shoes and Accessories in India. They will have the rights to manufacture, market as well as distribute Nine West Shoes. So on back of that, you have Bata India that is in focus, as well as Sundaram Finance. As you can see, the numbers flashing on the bottom of the screen. But let's talk about restaurants brand Asia, and that particular counter also saw a sharp up move in today's trading session. It actually gained most since September 15, and this after the company said that they've raised about 150 odd crore rupees in a term loan agreement with Axis Bank. No doubt the stock has given up some of its morning gains, but nevertheless holding on to gains about 2.5% as we speak, Vinny.
Okay, let's move on to the next stock, and this one on the technicals. Kunal, coming back to you for Sterling and Wilson Solar. On the charts, what are you picking up? Is it still a buy call?
Certainly, yes. So if you look at the recent formation on the chart, the counter is down by almost 30% from its recent peak. But at the same time, from 2020, July 2020 so far, the constant bottoms which are made is just on the same trend line where the counter has made the recent bottom. And today, it's showing extremely good strength. So considering the entire longer term view, I think this can be a good bargain buying opportunity. One can initiate a buy at the present level. The first stop loss on this can be 265, and the first target can be around 320 to 325.
Right, moving on, Vamakshi, let's talk about Vedanta, and why is this one in the spotlight today?
Well, Cheryl, the company reported its numbers over the weekend, and that is the reason why the stock is in focus today. A better than expected set of numbers actually came in from Vedanta. When we look at the revenue, revenue stood at 38,945 odd crores. Now, this is much higher than the consensus estimates of around 31,868 odd crores. Now, the company did report a one-time revenue and EBITDA gain of almost 4,760 odd crores, and this is pertaining to the Rajasthan block arbitration. But even when we strip that off, revenue has still come in higher than the street's expectations. EBITDA is also reported at nearly 11,479 odd crores. Now, this was higher sequentially, and that was mainly on account of operational efficiency as well as favorable input costs, partially offset by lower commodity prices. Margins for the company stood at 29.5% as compared to 19% on a sequential basis. The company, however, reported a loss of almost 1,783 odd crores as compared to a profit of 2,640 odd crores, and this was mainly on account of an exceptional item of almost 6,500 crores, majorly on account of adoption of new tax rate. So largely, the company has reported a loss this time around as compared to a profit on a sequential basis, and that is the reason why Vedanta, as of now, is trading under pressure.
All right, moving on, Ansh, let's talk about Godrej Agro. Then why is this one in the spotlight today?
The stock is up 2% today, and the company has reported a 5% increase in revenue, reaching 2,570 crore. Animal feed segment constituted for majority of the revenue actually, and the main volume in quarter 2 was mainly driven by cattle feed and aqua feed areas. Profit after tax saw a substantial 50% growth, totaling 104 crore approximately, and EBITDA stood at 201 crore, making a robust 34% increase here. Notably, EBITDA margin expanded to 7.8% from 6.1% in the previous year. Also, if you see the chart of the stock had been trying to break 470 level decisively from last 8 sessions, and today it seems to have given a strong breakout from this level.
Okay, let's move on and talk about Nalco on the charts. Kunal, what's the view on this one?
See, again, this is a counter which we have been discussing frequently on our show. If you look at the whole formation in the last 14 months, the counter is making clear higher top, higher bottom, and again, it took the support of 90 levels and it has bounced decently. And in today's trade itself, it's showing a good strength. So considering that, we can initiate a buy at the present level. The stop loss on this can be 92, and the first positional target can now again be 102, and then probably followed by 52 weeks high.
Talk about Apple. This one is in focus on the back of its numbers. When you look at the consolidated numbers on a quarter-on-quarter basis, we're seeing that the revenues have seen a sharp growth of 21% on a quarter-on-quarter basis. The EBIT performance has been quite strong as well. So operation performance has been quite good. 19.2% uptick in terms of the EBIT. Profits of the company seeing a good growth of around 14%. And on a basis, when you see the consolidated margins of the company, that too has seen a bit of a contraction. That's just the 30 basis point, but remained flattish on a large basis when you look at it. But yes, overall, when you look at it, the numbers seem a good set of numbers that have come in from the company, and that is keeping the stock a buzz, up 1.5% as of now as we speak.
All right, moving on, let's talk about Divi's Laboratories, and the only reason why, because you had the numbers that came in. If you look at the numbers, they missed ET now estimates, but as you can see, the stock is holding into the positive territory. Some commentary coming in on the capex front as well as from the con call, where they're definitely talking about the demand that for most of the established products is stable. They're aiming to start production from the new unit by the end of Q1 FY25. They're saying they're seeing supply chain stability also in the quarter that's gone by. Apart from that, what they're also talking about DVs is the fact that the product mix for generics and custom synthesis in Q1 were at 60% and 40% of the revenue respectively. They are also saying the material consumption is higher at 42% due to the change in product mix. These are some of the key takeaways coming from Divi's Laboratories, and you can see the stock on your screen reacting to those commentaries coming in from the con call right now, trying to nudge towards that 1% gain that is Divi's Laboratories for you. But let's stay with the healthcare space and let's talk about Krishna Diagnostics. That particular counter, however, is actually slumping in trade today on back of its earnings. At one point in time, the stock was trading lower by approximately 7.8% or so, biggest intraday loss that the company had seen since September 12th. If you look at the numbers, they reported a 32% drop in the consolidated PAT. It came in at around 10.5 crore rupees, while their total expenses saw nearly 37% rise. This was hit by input costs, which rose more than two-folds. However, the stock now trying to recover some lost ground. 3.8% downtick coming for Krishna Diagnostics, but yes, that one is reacting to its earnings, Winnie.
Okay, surely reacting to its earnings. But let's move on and talk about Borosil Renewables as well. And this one on the charts. Kunal, Borosil Renewables, what's the view coming in on this one? Where do we see it headed from the current levels? Currently trading at around 416. What should we be expecting now?
So it's been almost 2 years this counter has been sideways. I'm pretty much laggard to the entire market performance. And if you look at the recent correction, it was almost 30%, and from its peak, it's down by around 50%. But it's right now available onto that 2 years old trend line. The support is at around 405, and just 2 days back, it gave the first breakout of the falling wedge formation, which is very bullish in nature. So considering all the observations, I think one can initiate a buy at the present level. The stop loss on a conservative basis is 405, and the first target on this can now be placed at 460, and we'll keep revising the target and will advise to keep trailing the stop loss. I think the positional targets can be till 550.
All right, moving on, Vamakshi, let's talk of Bank of Baroda then, earnings candidate.
Well, yes, when you talk about the earnings of the company, the net interest income has actually come in nearly 6.4% higher on a year-on-year basis. PPOP has come in 33% higher. Net profit seeing an uptick of almost 28.4%. Whereas when we talk about the asset quality, that has seen a bit of an improvement. GNPA has improved by almost 19 basis points sequentially, while NNPA has improved by 2 basis points sequentially. Now we do have the company reporting a mixed quarter as per expectations from the street. Now PPOP was a beat, and however asset quality was a miss as compared to what the street was expecting, and that was mainly on account of higher slippages. NII was largely in line, but when we look at the NIMS guidance for the company, that has actually been lowered from 3.3% to 3.15%, as they believe that the deposits would now catch up. Deposits growth is expected to be 12 to 13% for FY24, while the total advances growth as per the management's commentary is expected to be 14% to 16% for FY24, wherein the retail book is expected to see a growth of almost 20 to 22%. So all in all, the NIMS guidance has been lowered for Bank of Baroda, and that could be one of the reasons why the stock is reeling under pressure as of now.
Okay, keeping an eye out on Bank of Baroda after its numbers. Let's talk about Interglobe Aviation or Indigo. Ansh, what are the con call highlights coming in? How are the numbers looking like, and what are the brokerages saying?
So the Interglobe Aviation is up by around 1.5%. Quarter 2 results have exceeded the estimates but are influenced by one-off factors. Company experienced a 10% decline in revenue to 14,944 crore. However, EBITDA showed a significant increase of 94% to reach 2,813 crore. Net profit dropped by 94% to 188 crore, whereas yields are down by 14.3% to 4.4 rupees. Number of domestic destinations for quarter 2 is 79, where we are seeing an addition of 5 from previous year's same quarter, whereas a total of 32 international destinations in quarter 2, an addition of 10 destinations on quarter basis. As of 30th October, they had 334 aircraft compared to previous year's 279 aircraft. Also, if you see the chart of the stock seems to have given a breakout from its cup and handle chart pattern.
All right, moving on, Kunal, coming back to you, let's talk about IDFC Bank. How is this one looking on the charts to your stock that tends to move every time that you have any news coming in on the privatization front? But on the charts, how does this one look to you?
Certainly, yes. This counter is turned out to be more like a momentum counter on the news announcements. But if you look at the overall trend of last 16 to 18 months, it's turned positive. Secondly, the first breakout which we saw in the beginning of August was at around 60 levels, and from there counter went up by almost 25%, made a high of 75 and came back to the same level again. We call it as a technical retesting of the breakout zone. Considering that, I think this can be a good bargain buying opportunity. One can initiate a buy at the present level. Stop loss being 59. Now again, one can expect the rally to continue on the north side. I think the targets can be 75 again.
Let's talk about Shipping Corporation of India, another stock that is in focus on back of its earnings. If you look at the stock, it actually fell as much as 7.8% at one point in time. Now the stock is down about 4%. They reported more than 42% on a year-on-year drop in their consolidated profit in the quarter gone by, while their revenue from operations saw down to as much as 23% on a year-on-year basis. This is the revenue from their biggest segment, that's tanker, which formed more than 2/3 of their total revenue. That particular segment saw a downtick in their revenue by about 4.1% on a year-on-year basis, and that sort of has impacted the stock performance as well. 4% downtick as we speak for Shipping Corporation of India on back of its earnings.
Okay, that is Shipping Corporation of India. But let's move on, talk about Britannia on the charts then. And, Kunal, when you look at it in terms of the last 6 months, overall, after July, we've seen a bit of a subdued performance, specifically coming in for Britannia. Now, what are the charts indicating for Britannia?
If you recall, we have been discussing this counter since I think 2.5 months. It's not giving any momentum, to be very honest, but it's offering the best risk-reward ratio. And post this result announcement, the way it has reclaimed the lost ground seems to be really strong, and this momentum is now gaining the pickup. I think this can be a good this can be a good observation to initiate a buy. Keep the stop loss of now at I think around 4,500. Buy on decline can be done. Even at the present level, one can initiate the buy. And now the positional targets on this can be 4,850 to 4,900. I think 2 months of waiting can now get rewards.
So that's the review coming in on Britannia. But that was actually the last talk on this edition of Market Fatafat. Thank you so much, Kunal, as well as Nagraj for joining us on the show, as well as Vamakshi and Ansh for taking our viewers through all the stock buzzing in trade. And with that, we are out of time on this edition of Market Fatafat. It's a goodbye for Vinny, myself, and the team that put the show together. Stay tuned. Closing trades coming up next.